Liz, great to have you with us. It is interesting just listening to Priya's comments there, how much it feels like the Fed messaging and positioning going forward will influence the mood of the fixed income world. And you talked about that extensively in your piece.
Yeah, and Priya must do a lot of meditation or something. She's always so calm when she speaks, no matter these markets have been crazy. But yeah, the market is going to be watching. I think they're watching so many things. It's difficult because they're going to be watching the data, like we have PCE coming tomorrow, but they're watching the banking flow data and the weekly Fed reports. They're watching any signaling from Fed officials. What do they have to say? So it's a lot of stuff they're trying to gauge, kind of, how close is the Fed to done? The market's now pricing for about over 50% that they do one more quarter point hike, and then they cut. So there's just so much on the radar. It's kind of tough for people to keep it all together.
Totally true. We have to make sense of it every day too, Liz, so it gets pretty tricky. And part of the big take story that you guys did is considering whether or not Treasuries are still a safe haven asset. And the SVB is kind of front and center with that because they had the duration risk. I totally get that. But technically, 10-year Treasuries are considered safe. Are Treasuries safe now?
Right. And, this story, and I had a few people ask me some questions. Of course, and our finance team has done a lot of great stories on it. The SVB's risk management folks didn't do a good job. That aside, we're looking at what was on their balance sheet: Treasuries, agency mortgage-backed securities, among the safest securities. So what's going on? And like duration, which people think, it's kind of a wonky bond thing. It's a real problem, and especially when the Fed raises like 5 percentage points since March. What happens is even these uber safe things, their price, if you sold it in the market, is down a lot than just if you held it to maturity. So duration risk, which we didn't have to worry about for a long time because rates stayed low, we had a bond bull market for decades, that whole paradigm seems to have changed. So that's why you're seeing the value of these securities on banks and other folks, balance sheets, not what they were if they were held to maturity.
And I liked a quote you had from someone, a longtime audience will know, Paul McCauley, formerly of PIMCO, that Treasuries are the world's safest asset from credit quality, but not asset price stability.
Yeah, and Paul, stressed to me, who's teaching now at Georgetown, that, listen, Liz, par is a whole different story than, where you get it right now. And that's what people have to realize, that asset price stability, there is none, for any of these securities, even though Treasuries are, like he said, risk-free from credit. The people have to realize, like Paul said to me, look, the only thing that's 100% for sure is a federally FDIC-insured deposit, right? Other than that, you don't know what you're going to get in the market. It depends on the outlook on inflation, the Fed, et cetera, like everything you guys have been talking about. So I thought Paul's points were very valid, and he's always kind of interesting and colorful in the way he speaks as well.